Welcome to Trading the Markets. This is Richard Joseph, not your financial advisor. So everything here is for educational purposes. And to get started. Hey Shay Shay,
Hola,
what's going on?
nothing, just doing everything I want, you know me.
That's what's up. That's what's up. Peep the logo.
I know, I see. It's going crazy. It's cut off a little bit, but we see it.
Yeah, I'm working on making it all fit in there. It's
Yeah,
yeah, but
we
I'm
need a
making
reason.
progress.
But
But
it's no, that's what's up though. You didn't have a logo last time. That's progress right there.
absolutely, absolutely. Like I just been having like a good weekend. Sadly my grandmother passed away this past weekend.
Oh,
Um,
sorry to hear that,
yeah,
friend.
thank you. But just taking everything that all the lessons, everything she basically taught me, showed me. I feel like grandmothers are like magical,
They
like the
are.
lessons. Yeah, the lessons. Like the good thing is that we didn't know that she was like getting ready to go, but it's still it still sucks, just to experience it.
Right.
Yeah, what's
No,
going on,
that's
Travis?
What up? What up, man? Can you hear me?
Yeah, I hear you. I hear you. Yeah, I was just letting my friend know my grandmother had passed away this past weekend. But
Oh, I'm sorry to hear that, man.
yeah, no doubt, no doubt. But at least we knew that she was getting ready to go. But it's just we at least we made preparations and stuff before, because she was 90 years old. So, but
Yeah, yeah.
yeah,
My
I was just
grandma
like,
passed, man. I just think of all the good memories, times I smiled with her. I don't really
hmm
think that's all I think of, man.
yeah, that's what I was saying. Grandmothers are magical. Like. Just the lessons and the memories. But yeah, so I want to get into like a whole bunch of stuff. So let me just share my on my screen and kind of get into everything. And also like y'all give me some ideas to bring up some stuff. So you guys, as you guys know, the future just opened up an hour ago. Not,
Yeah,
so yeah, so the future
they
is,
opened up trying to be tough.
So I already immediately see like, this liquidity grab that happened on Thursday. So that's a target right there. The market's probably gonna take that out. But that doesn't mean it's not gonna reverse after that. But at least I know like that's like a target like that high on the ES. So this is gonna be basically if I go to SPY, it's gonna be let me make this bigger too. Yeah, so that correlates to the SPY of the all-time high that we had right here. Let me move these up. But like this was like during the remember I remember you showed me during like this consolidation period where I'm like it might chop more, but then it broke out. So I remember that last week. I always try to like start from like the past to see like how did we get here, you know? So it's like you see like I remember this day was a crazy day. And I think it was it the rate cut? But basically all these events happened and the rate cut happened. What's the other one? Quad witching. So you guys know like with options, futures. So I look at it like this, like the market's on a time schedule, like it's like clockwork. So you got to know the big picture, the big events, so what's going on. These few days, okay, please. Yeah, so quad witching. So the most important expiration dates are the quarterlies. So that's March, third week in March, third week in June, third week in September, and third week in December. Those are the big dates that the market makers get. They got to balance out the market because, like, at the end of the day, the market makers they're just trying to balance out the market to see, so that they don't got to pay us too much money, so that we can pay each other off, and they don't got to pay us so much money. So one thing I look at is the what is it the expected range of the week. Yeah, expected range. Because the expected range basically has a 70% chance that SPY is gonna close. So the expected range for this week was SPY was gonna close under 585, which it did. And like these ranges work 70% of the time, so it's a good probability. Let me see if I still have that chart. Because there's a chart. I'm gonna have to log in to show you guys the chart. Hold on, give me 1 second. Forward. Here we go. So like this is a report that my mentor comes up with, and was that last week? So this was a spy chart from last week, right? So as you can see, like the expected range was between 588 and 570, and then SPY closed in between that. But the way to find it is very easy. So like this is the way I do it. Let me log into Thinkorswim real quick. Hold on. And I'll show you guys how to do this, but it's very important to do to see like what actually is reasonable for the market to do. Hold on. Right, so it's basically implied volatility for the weekly. So today's Sunday. So I'm gonna look at SPY's expiration for this Friday, which is the 20, what is it, 27th? So come over here, go to SPY. So this week is 24th. Is that Friday? Let me just make sure I'm saying the right dates. Calendar. 25th. So the 25th is Friday. So you come over here, you see how it says October 25th, and you see this number right here. It's 13.12%, but right here it says plus or minus 707. So what we're gonna do, we're gonna add 707 to the current price of SPY right now. So right now you see SPY close at 580, 584.59. So I'm gonna add 707 to that, both up and down. And I'm gonna mark that out. And that's gonna be the range for the week. So 585, 584.59 plus 707. So that's 591.66. So let me just use these lines since I have it already. 591.66. And I could just actually enter it in. 591.66. All right. And I'll lock that right there so don't move. And then on the lower side, 584.59 minus 707. 584.59 minus 707. 577.52.
Which so you're on your chart on Thinkorswim? Oh,
No, this
TradingView.
is
I'm on
Trading
TradingView.
View.
Your chart looks so different.
It's Trading View.
That is TradingView. I'm
Yeah.
tripping.
Yeah, it's Trading View. So yeah, so this is the expected range.
What
So
tool you just set your alarms for those numbers for those
yeah,
prices?
yeah, because I want to see when SPY goes outside that range. Because I know like if we go outside the range, the chances of us coming back in that range is very high.
Got you.
Yeah,
Okay.
so I just put alarms there. It's like, and then that could be my targets if it's going towards it too, to take profit. If I play SPY, but I can do this for any other stock. But I really do it just for the indices like SPY, QQQ, because it shows you like if we're inside or outside expectations. So I'm just gonna write expected range. So you want to your chart to be your roadmap for the week. So that's why charting is important for me. And I'll make this purple, and I'll clone this, and I'll put this down here. There you go. And then I'll bring this right here, and this right here, and then I'll even make boxes just to let me know when I'm in the area. Make this red. This is where we might have a high chance of soon selling off soon. And then matter of fact, let me put it right above it, right? And then I'll make one for the other side. right? Like this one green, right? So this is this. So to me, these are the ranges where the market could have a higher chance of selling off, and then where the market have a higher chance of bouncing. So then I'll go to the 1 hour chart, and then I'm trying to look at so diagonal levels kind of hold better than horizontal levels. So I'm just trying to like look at levels that I might be able to mark. So let me do let's see with the parallel channel tool, and then something this, like this, all right? Something like that, and then let me change this to like different color style, just make everything yellow, maybe darker yellow. There we go. I could make this. No, I'll make it yellow too. So I'm just marking up levels for me to really pay attention to, like key areas. Because what I'm looking for is to the bottom and to the upside. Where might this actually break to the upside and break to the downside? So I'm basically just kind of making levels to see like, okay, if it crosses the bottom channel, maybe we'll go down towards the bottom, but if it crosses like the top of the channel, maybe we go up towards the top. So I'm just kind of, and then I'll just put alerts. I'll put alert on the whole thing just to let me know when things are happening ahead of time. All right, so I have my levels for SPY. I'm gonna watch to see what it does, and now I know like the expected ranges, and then I'm gonna mark up that high that I marked up on the futures, and I'm gonna watch when we break levels. I'll even do one for the bottom too, and then I'm pretty done with SPY and the levels that I want to chart is right here. Maybe I'll do a little earlier. Let me know. Yeah, right here. So now when the market moves, I'll know which way and then I can make an assessment. But there's also another number, let me go back, called the market maker hedge range. So basically if you look at the probability and profit, so you can so this thinkorswim by the way, and you could select the layout, and one of the layouts I want is probability and profit, probability in the money, I should say. Is it in there now? No, I don't see it. Hold on. Customize probability, probability in the money. There we go. All right. So what I'm looking for is I wanted to have a 90% um probability of finishing out the money. So if you notice right here, this says 91.6% probability out the money. Right here is 88. So that's between 593 and 594. So I'll split the difference. So 593.50, that's gonna be the market maker hedge. 593.50. 593. So let me make a whole nother line. Oh no, not this one. I'll still use this one. Clone 593.50. Coordinates 593.50. And then let's make this like gray. All right, how about another color? Make it dark green. Make this a little bit more visible. All right, so up here, I won't even use this box, but this is gonna be the market maker hedge. Right? So that's the market maker hedge. And then on the bottom side, I'm going to do the same thing with the puts. So if I go back to the screen, looking for around 90% probability finishing in the money out the money. 90's right there. So 572. So that's going to be the market maker edge for that side. Make this dark green. All right, so now I got the parameters of where the market can go. So like this is good for like if let's just say if you wanted to go out the money with options, it doesn't make sense to go past the expected range. For instance, it doesn't make sense to go past that because you're going far outside expectations. But if it does make a good big move and it's within expectations, then you have a high probability of that actually happening. So, all right, so that's the SPY. So we're gonna see what the SPY is gonna do this week. But what I like to do from here is look at the rotations. So right here is if you go on stock charts, you gotta create an account. You can use this thing called the RRG chart. So I what I do, I look at the S&P 500 and I look at it on different time frames, but I look at it off the 60-minute. Is when I look at it off the 60-minute, it takes about 3 to 4 days to finish this rotation. But as you can see, these are the 11 sectors of the stock market. And what you're looking to see what's moving together. So like for example, you can see XLP and XLR are moving together. And those two are what is that called? Defensive. So this is a defensive sector and this is value. So I see defensive and value move right there. So basically it's three categories. It's growth, put it like this, growth, value, and defensive, right? Defensive. So growth, that's your tech. You got your XLK, that's tech, right? Then you got XLY, that's consumer discretionary, right? And then you got communications, right? So that's communications, right? So so the growth is your strongest sector. When the economy is doing good, they do really good. But when the economy is doing bad, they're the first ones to fall. So we're looking at the growth. We see XLKs over here, we see XLCs over here, and then XLYs over there. So notice growth is being rotated into. Like if you look at these two, it's staying more in between the leading and the improving. So growth is kind of being rotated into based off the 60-minute. But at the same time, you might argue that it's starting to rotate out of at the same time. So it's not the most clear. But then I look for the other sectors to see what they're doing. Like, so this is defensive. So defensives, that's, defensive, they do well when the economy's struggling. So that's utilities. I'll just write the name utilities. Um, real estate. And what's the other one? Uh, what else is sometimes defensives? Oh, consumer staples. I'll just say staples, right? So you got to know the sectors to trade like this and know where money's coming out of and into. So that's XLU, XLRE, and XLP. So now, right? So and then value, that's when you have the banks, XLF and XLI, industrials. And then you got XLD, which is energy, which can be in any sector, but a lot of times it's defensive. So I'll put XLD in the middle. That's energy, right? So now, like I was saying, the market is a group race. So whoever's in front eventually becomes in back, and whoever's in back eventually becomes in front. You guys understand that? So what we're looking at is we see the healthcare defensive. So healthcare is rotating into so if you see something rotating from here to here, that's good for the upside. If you see something rotating from here to here, that's good for the downside. So you're just trying to see what sectors you want to play trades in. So what's interesting to me is real estate. You see how real estate is going from weakening to lagging. So it could already take its time to do that rotation. So that's why I'm really looking at real estate and utilities. So with this sector, with this rotation, the further it is away, the longer it's gonna rotate, the stronger the rotation. So utilities is a big one. So I'm gonna show you. So I'm showing you guys here on the chart, on this chart, why I'm gonna go to the actual chart. So I don't start on the chart. I just start here, and then it's gonna lead me to a trade idea. All right. So that's everything. Let me erase all this. All right, so I bet. So we know.
Wait,
So
so
we
I have
know.
a question real quick before I
Go
forget
ahead.
about it.
Go ahead.
So so when it goes into the next area, right? So say for instance, it's going from improving to leading, it's gonna go in that same direction, right? Or could it possibly go from improving to, like, say for instance it
Yeah,
goes
yeah.
to leading, is it
It
gonna
doesn't.
go
Yeah, it can go to any section because if you look at right here,
okay.
like some of them are not moving in a circle. Some of them are kind of moving squiggly. You know. So,
Right.
but
So it's
when
not a guarantee. So like if say for instance XLE goes to leading, it's not a guarantee that it's gonna go to weakening after. It could go back to improving.
yeah, yes, you're right.
We're just looking at this to see which
Mm.
direction, like
So,
which side of the
and you want to look at who's moving in a group. You want to group them to see which category is moving together. Is value moving together? Is defenses moving together, or is growth moving together?
and that's based on the patterns. So
Uh,
like
So like you see how like these two are moving together?
yeah, they have a similar.
Yeah.
So would that be so? Would XLV and XLC be an example of moving together as well because they're going in
Yes,
the same
yes.
direction?
Yep, they're on the
Okay.
same direction. Those are moving together as well. But
Okay.
what you really want to see is what groups are moving together. Because sometimes you might see separate groups, like you might see a value moving with the defensives. But what you really want to see is like defensives moving with defensives, value moving with value, growth moving with growth. Because that's going to
Got
give you
you.
more conviction into what sectors are going to have the rotation.
More confirmation.
Right.
Got it. Okay,
Yeah,
thanks.
and then I'm looking at the 60 minutes. So this takes 3 to 4 days. 3 to 4 days to make a full rotation. Does that make sense? It takes about 3 4 ways. So when I see some of these plays, I can swing them, seeing that the main it might go to improving within like XLP might go to improving 3 to 4 days, or XLU might go to lagging and then eventually improving in like 2 days. You know what I mean? I can use it. So basically, this is used to help you time like different moves in the market. But you're gonna look at this and then you're gonna look at the chart and then you're gonna so I'm gonna show you how I do this whole investigative work where I'm like a detective in the market. So then I look at the 30 minute because that's gonna take 1 to 2 days to make the rotation. So now you see how they're rotating. You see banks, energy are going from improving. Technology is down there too, but then you see XLY going down. They're leading, but they're starting to rotate down. But the ones that I'm really concerned is when they cross from leading to weakening, and when they're crossing from lagging to improving. Sometimes I look at improving to leading too, but I know that's later in the rotation. But XLU is popping because I see how it's going from improving, and then when I looked at it on the 60 minute, I see how it hasn't even reached it yet. Like XLU, you guys see that? So like right here, it's just going from weakening to lagging, right? So that means it hasn't even like done any of this rotation yet, right? But then on the 30 minute, you see how it's already started doing that rotation. So that's showing me that it has more legs, it has more room to run. So basically from looking at this, my two favorite sectors are XLU and real estate, XLRE, I think. Anything else I like? Let me go back. But at least we're identifying where we want to look. Yeah, XLV is not bad either. XLP, XLR might be interesting, but I like XL. I like real estate and XLU more because you see how early they are in this rotation. I think they have more time to swing it. XLF is not bad either, but as
I'm
far
gonna
as
say I caught
yeah,
up.
what were you saying?
No, no, go ahead.
Oh yeah, XLF's not bad, but now like as far as like what I'm looking that's looking weak right now is XLK looking like it might be looking weak right now or to come. XLK technology. And you guys know technology is the biggest sector in the stock market. So if technology go down, the other sectors have to do good or else the whole market goes down. Yeah, XLK. Where's XLK? XLK. Okay, so excellent. So so sometimes it's not useful when you see like they're not really moving in a very clear pattern. Like look how XLC is moving more clear, and then you look in the middle right here, XLP, XLI, they're kind of like jumbled in the middle. XLU is looking more clear, like it's trying to improve. So that's why I say I like XLU and I like XLRE. Those are my two favorite. Like I said, XLF is not bad. Energy's not bad. They look like they can make runs too. But on the way out, some of these might be technology, materials. If they keep going down, even consumer discretionary, I gotta watch out for. You know, but you got to keep watching the rotation because they will sometimes go back and forth. So, but at least you get an idea of what's more clear and what you want to look for to make. It's like you would rather make a layup than make a three-pointer. So some of these are gonna give you like clear, easier setups to find easier trades that make more money versus wasting time in your favorite stock that doesn't move. So all right, so that's that. So now let's go to so now that we got these ideas, let's narrow our focus. So I can come here now and I like real estate and I like utilities. So I go to utilities. Let's go to utilities. So now I'm comparing all the utility stock to the utility sector. Before I was comparing all the sectors to SPY. So if you notice the benchmark before was SPY, now it's utilities. So now these are all the utilities companies, and it's showing you which ones, going from leading, improving, lagging, all of that, right? So I go on the 60 minute and I go on the 30 minute. Those are the two that I really evaluate. So and then notice these are moving more like in a circular motion, looking like the planet's orbiting, right? So I like some of these more, but it's like also, the thicker the line and the further away it is from the center, the stronger it is in the rotation. So some of these that pop out is NRG, energy, get it, and then CEG, and then you got Duke. So these are different utility sectors. The one that I like to play is this one right here, NEE, and I see it's starting to rotate a little bit down, but let me look at a 30 minute as well. I want to see it on the 30 minute. NEE is one of my is the one that I like to play the most. So as you play some of these, you get to find out. So NED, so this is already telling me like, yeah, NED might be good, but there's better ones out there that are have clear rotations. You see what I'm saying? So instead of me playing NEE like I normally do, I can play something else that has a stronger rotation. And then now if the chart matches, it's gonna give me a much more edge on my trade. So NRG is popping out, CEG is popping out, and these are clearly rotated to the upside. Meanwhile, to the downside, you see XEL, ES, Eversource. That's actually my utilities company out here, and you can see some of these. So what I'm gonna do is now I like utilities. I want to play utilities, but which stock should I play utilities with? So I'm looking at NRG, I'm looking at CEG, even Dominion. So now let's go to the charts. Now we can go to the charts. So let's go to
On that
so
stock charts on that you're looking at, is that you had to have a subscription for it or you could just
yeah,
look at all
yeah,
that?
you do this one is a subscription for it. There's another free one called rotation relative rotational graphs.com, but it's not as
Huh?
good. It's not as good, but
How
it'll
much is
show
it?
you. It's that one's free.
No, this one, stock
This
charts.
one's I think it's $14 a month.
Oh, okay, that's not bad.
It's not bad. And
Yeah, get that.
it really helps me know where to look, you know,
You
and
get it
find
back in one.
yeah. So now utilities. So like let's look at the sectors. XLU first of all. So if you look at the whole sector, you see that like and mind you, like I play this a lot, but it was staying inside this diagonal channel. Now we're back in there, and now we found support in there. So I really like it to the upside. But like I said, I'm not gonna just play XLU. I'm gonna pick a champion inside XLU. So let's look at NRG. That was one of them. NRG. So I look at it on the 1 hour. It looks kind of weak. It looks pretty weak. You know, if you look at it, it looks pretty weak. Is it gonna turn around? Maybe if it can get above here and turn around, there could be opportunity. But this is not my first choice. All right. So NRG was the other one. CEG.
You like you
CEG.
like it off a bounce off that fair value gap down there?
Only if it does that, because overall
Oh,
it's looking weak. But if it
the
can
next
if it can if it can actually prove itself, then I would like it. Like if it
you
can
you
get above if it can get above
I
here,
like
if it can get above here, then I'll
mhm.
consider it.
Oh,
But I don't see enough strength. I'm looking like this. There's other stocks that have more strength than this that I could probably have a better chance of winning from. Does that make sense?
yeah.
Yeah, like yeah, I can put an alert there, and if it does what it does, yeah, it could work out. But let me look for a. I'm looking for a layup. I'm not looking for a 3-pointer. So NRG, then there's was it CEG? CEG. Let's look at CEG. Look at the difference in this one. This one has more strength. Even though it's down, it went down just like the other one. But do you see how this one has more strength than the other one? Like it clearly has a lot more strength because it's
I see
chopping,
it.
huh?
Like you say, that'll be an upside layup. The other one will be a downside layup if it
Well,
went that
yeah,
way.
most likely it has a yeah, it's an easier chance of that happening than an easier chance of it happening another one. So this is the one I could consider, but now I got to look at the options to see if they even have liquidity. So that's the other part of this. So you go to CG over here. Do they even have liquidity? Because if they don't, it don't even matter. Let me take this, erase that. So look at the spreads. First of all, they have weeklies. That's a good sign. And then if you look at the spreads are mm, so the rule for the spread, you don't want that. You want the ask. You want the spread to be 20% or less of the ask. So if you look at the ask is 640, right? So 10% of 640 is 64, right? So if you double that, that's 128. So you do not want the spread. You want the spread to be $128 or less in between. So if you could do 1590 and 640, yeah, it is less than that. It's actually less than 60. So the liquidity checks off. They're not cheap, but liquidity checks off, you know? So
Mhm.
so now if I was to trade this, I would not do the weeklies. I would at least want to do 1 week on top of it. Even if I am scalping, I see the liquidity drops off. So then I look at the month. So monthlies, remember, so the major expirations are the monthlies and the quarterlies. So every third week of the month is a monthly, and the monthly expiration is going to have the most liquidity because it has the most volume. So I'm looking at these 12. They're very liquid, very, very liquid. But I could maybe get one contract. They're just expensive. You know what I mean? They're just expensive. But that doesn't mean I won't consider them. So what I will do, this 290, I'm gonna just buy it on the demo, and then I'm going to put alerts on the chart if I wanted to play this if because I like this because for a number of reasons. I like it because you see, the day before was a clear imbalance candle where it was a clear way down, right? So now if it gets above this and starts to go up, it's gonna be a clear way up, and I got a clear target right there. So I would want to trade this something like this, like where even if I was to get in where it is, or if I want to buy a dip, maybe buy it down here near the low, near the opening price, right? And then I would do trade it like this where I put my stop loss somewhere underneath this candle right here, just to give it plenty of room. And then I would target this high right here. And that would be my swing trade. And that you see that's a good 3.6 to 1 risk to reward. Even if I enter, so now another scenario, what I would also enter if it shows strength. So if it gaps up and gets above this right here, I would also consider entering. So two ways, either I buy the dip or I buy the rip. So those is how I would enter those candles. Because why? Because of this. So you see this big red candle. Whenever you see big red candles or big any type of candles, those are targets that you could use. You know, like you see like how right here, this was a target. So like if you see this down there right here, now when we start going back up, the target is right there, and you see that it didn't take too long for us to eventually break that target. So I like this, and this could be a one contract trade, but that one contract, if we get back up to 285, could pay very, very well. And I would have all this time. Yeah, it would cost me $900, but I would have a sturdy contract. So I'm really focusing on buying quality over quantity. So even if I had to buy this is a decent candidate for me if I want to play utilities. Can I find a cheaper name? Yeah, probably, but I like it
Could you find a cheaper name for a
for
cheaper guy like
utilities.
my?
Yeah, I got you. I got you.
What's the one you did before that? What was the name of that one? Was
And,
that any?
NRG, yeah, NRG. This
I
one,
like that one. I like that one off about 82. I like
okay,
that bounce back right there. No, right up at the bottom of that blue can. Yeah,
right there. If it comes back,
yeah,
let's
right
look at the
there.
option. I'll look at the options for you, see if it's cheap or not. NRG,
All
and if it
right.
has liquidity. This one has monthlies, so it's already has less liquidity, but
Only monthlies?
yeah, it only has monthlies.
Oh, okay. I like that. I like that. But
Yeah.
you said
But as
yeah.
far as liquidity, it kind of drops off after. I wouldn't not go no beyond the $100 call, and then
Okay.
on the put, I wouldn't go less than 75 put.
10-4. Yeah, they move pretty nice too.
Hmm.
Mm.
Yeah, it moves a
How
lot.
much? What's the ATR?
$2 and 85 cents a day. It's pretty good.
Oh, so it could move about $5 and
Hmm. So if anything, I'll just put an alert here just in case it surprised me, but I'm not sold. The one that I play all the time for utilities is this one, NEE, and I like this setup a lot more because
oh
like my last trade on it went really well, and this line right here
yeah,
was really splitting like between the uptrend and the downtrend. And then now that
yeah,
we're finally coming back up to that line, I'm like, all right, we can finally go for uptrend. Clear target will be right there. Stop loss can be any one of these lines that I have. But if I get
yeah,
a dip buy, I would like to buy it down there. So I would like to for this to sell off and me to get in like around here. But
yeah, yeah.
yeah, that's the plan. But also, if it gaps above this, I can also catch a quick day trade, probably up to here or up to wherever in between. So that's one that I like. But just for me to look at which one is the better trade. Oh, matter of fact, we got less than a minute. Y'all trying to log back in? Log out, log back in.
It's cool with me.
All right, I'm gonna log out and log back in. See y'all in a minute. Tap back in, y'all.